Rayce Robinson, how are you? Hope you're having a great Thursday morning. Driving to the office, I was thinking about the meeting yesterday with the Fed, and I got a lot of calls on it, people freaking out. Oh my God, rates are going up. And I was looking at the market this morning, and rates are actually improving. Not a lot, but a little bit. So how's that possible? So the answer is that the Fed's move yesterday was already priced into the market, which means actually everybody thought the Fed was going to raise earlier this year, I think in September. But the move yesterday to raise the Fed funds rate from 1/4 to 1/2 was already priced into the market. Everybody knew it was going to happen. And what the Fed said at the meeting really wasn't out of the ordinary. It was actually what they were expected to say. So because of that, you're not going to really see a big change. Now, raising the Fed funds rate, which they said they're going to continue to do, will put pressure on mortgage-backed securities to get worse and actually make rates get worse over the next year or two. So you're going to get a trickling down effect on rates. Now, in the short term, I don't think you'll see a bunch of big changes. In 2016, it's an election year, so who knows what will happen, but rates could stay decent. But there, like I said, that pressure is going to be there, and they're going to continue to raise the Fed funds rate throughout 2016, potentially 3 or 4 more times. So how do you use this information? So one is when you're talking to buyers, rates are going to continue to trickle up like they've been, and there's more pressure now. So it's definitely a time for them to get out there and start looking to get in a house. But two, rates are typically at their lowest when markets are at their worst, which means when the housing market and markets are uncertain and all these things are going on, that's when you're going to see really, really low interest rates. As the market gets better, things are more certain, rates are going to get better. Now you've got the Fed, whose actually sole responsibility is to monitor these things, saying housing market looks good, labor market looks good, all the markets are performing well. So you actually have the federal government, the Fed, saying, you know what, things look pretty good. So there's, in my opinion, never been a better time to buy. You've got rates still low. You've got the government, the Fed, people saying the housing market is healthy, labor market is healthy, and the prices have really kind of stabilized. So it's definitely a good time to buy. Use this information to motivate your buyers and educate them that yes, rates will go up, but it's going to be a trickling effect over time. So definitely it's time to get out there and find a house. So if you need anything, let me know. I'll be here all through the holidays in the trenches working. So I'd love to help. If you need anything from me or my team, just give us a call. Our contact information is below. Have a great Thursday and Friday and holiday season, and I'll talk to you soon. Bye-bye.